Hello, everyone. Hope you're doing well, especially in these market conditions. Welcome to another Casual Friday, brought to you by the FTX app. Best mobile trading app on the market, portfolio tracking. If you don't want to trade, that much is understandable. Someone that does want to trade is Don. I was just sat here wondering whether we have to make another video title for Casual Friday. DonAlt, big, long, gone wrong, again, question mark? Is that the route we're going? But we'll obviously discuss your trade idea that you've posted quite publicly and the state of the market in general. But it's going to be one of those episodes where most stuff looks pretty rough. It's insanely news driven. It's insanely fear driven, but fear that's quite justified and reasonable, right? And all the headlines are obviously about Celsius lockup and most recent 3AC's margin call liquidation unwinding. This is just going to be one of the crazier episodes because the market is falling apart, to be completely honest with you, from a market structure point of view. You know, you're having some of the biggest lenders in the space make solvency statements that they're okay. Genesis came out and BlockFi came out basically tweeting, yep, don't worry, we liquidated 3AC, we're fine, which is just a crazy thing to contemplate. How we went from super cycle to liquidation, likely debts, insolvency. I mean, this market is ruthless, right?
Yeah, it is. I mean, do you remember my tweet where I said, "What if this is a bearish super cycle?" I feel bad about it now.
It's your fault basically at this point.
Yeah, I mean that happened right before fucking free AC got liquidated, like just a day before, I
Yeah,
think.
yeah. I mean,
Oops.
when I met up with Kyle in Singapore as the market was moving lower, and I don't think anything that's particularly commercially sensitive, given they publicly said they started buying at like 45K, right?
Hmm.
That's where they first started punting. But as the market went lower, when I met him at, I don't know, 36, 38K, or I think around the 40K handle, from our conversation, and I'm trying to be sensitive here, but their conviction on a reversal was fairly high, and clearly that didn't age well, and it's unfortunate because they were hit by a bunch of stuff at the same time as well, right? They were in Luna, got wiped there. Presumably GBTC discount got massive. I think they were in that trade. Staked
Yeah.
ETH, not stable at all, and then their layer ones getting completely creamed. Bitcoin ETH getting creamed. It's just, this is crypto, right? You either make all your money at the same time or you lose it all at the same time. There are no intra crypto type of safe hedges to be long or anything like that. You either own the sector or you're getting owned by the sector. It's kind of how it feels like. And this is a crazy way of manifesting that.
Yeah, 100%. I mean, what they basically did on everything, as far as I understand it, is just like take leverage bets on the
Right.
long side, be it like you said on ETH, because you could also like leverage yield farm there, and I'm pretty sure they did a bunch of that. So it's just kind of like it's very very unfortunate, and I find it kind of funny because a lot of people, um, while the market was going down, right, were like shit talking free AC for like baiting them in or like psyopsing or whatever you want to call it. But at the end of the day, it turns out they were just like giga bullish and they just got fucked for it, um, alongside everyone else. Now, what they've done and how it all went wrong or whatever, I'm not like too privy to, so I have no idea if they did anything like beyond just being wrong. Um, I mean, that's like, I think that's completely fine being wrong. Obviously, if you do more than that, if you like bet with more money than you can actually have and then lose it all and that kind of stuff, I have no idea. But that's obviously bad. But in general, like it's funny because people always said, yeah, they're making people buy and then they're selling into them. Turns out they didn't. They were just super bullish and wrong.
Yeah, I've had this debate in like Twitter Spaces, for example, and so you essentially have two propositions, right? The first one is that they are somehow using or leveraging their Twitter following to generate like counter trend liquidity so that while they're bullish, they have their sell orders get filled as a result of their tweets and vice versa, right? That's kind of one belief. And the second one
Yes.
is, I think, far more compelling, is that these are guys who just talk their book and they get just as euphoric as normal people do, and they're sometimes just as wrong as other people are as well. There are just a lot more zeros and stuff attached to the accounts, right? And you
Yes.
and I discussed this with Kyle. We were like, how do you size up a trade? What does it take from a position sizing point of view? And do you remember the denominator he used? He was like, what percentage of market cap are we going to be long when we buy altcoins, right?
Yep.
So then, if you take that at face value, which you should, and we know from recent news that they trade a shit ton of size, for better or for worse, then you have to think how plausible is it to suggest that whatever tweets they make generate enough in buying interest for them to meaningfully shift their book around, their P&L around, or their deltas around? It just doesn't make any sense, right?
Yes.
People just wanted a bogeyman, and by Jove, they got one now, right? Because the elephant in the room, and I think it's worth defining terms a little bit here, because everyone's talking about contagion and collateralized loans, and what all of that means. It might help our audience to maybe lay out the landscape a little bit. And correct me if I'm wrong, and jump in at any point here. But the
Hmm.
TLDR version is, especially when you're a reputable hedge fund in crypto, you can borrow money quite easily. You get access to credit on favorable terms, right? And you use that credit to presumably, like in this case, establish long positions, kind of just like a degen does on an exchange, right? You put up a fraction of the collateral for the position you want to open, and then as a result, you get more capital to trade with. Is that correct so far?
Yes.
Okay, and then if your bet starts to go wrong, you may start getting a margin call. And now that's not the same thing as being liquidated. A margin call just means, hey, look, it looks like you're losing money, and the person or the party that lent you money wants to make sure you're good for the amount that they lent you. And so as a result, they'll ask you to pay some of that back in order to make the creditor feel slightly more secure, and they don't want you to completely blow up because otherwise they get none of their money back, right? The trade normally from the creditor side is that you provide capital to hopefully a credit-worthy, reputable entity, and you get to charge interest on that capital, right? More or less.
Hmm.
And then you get your the amount you lent them back, and with interest rates on top of that. And sometimes there are different like side agreements or P&L sharing stuff, whatever. But for the most part, that's it. You get the amount you lent, and what makes it attractive is that they're supposed to be credit-worthy parties you're dealing with, and you get interest payments. Now, if their bet starts to go wrong, and usually there are disclosures surrounding this, or they're supposed to keep you informed, or unfortunately, as we found out in crypto, a lot of it is purely trust-based. They just trust that you're doing well, or you'll pay it back, or you're good for the money. But as it starts to go wrong, just like when a leverage trade starts to go wrong, you get a margin call, which doesn't mean the whole position gets forcibly closed or liquidated. It's just the party which lent you the credit, the creditor, wants you to post up more collateral so that they're secured if it keeps going wrong or if you keep losing money, to kind of increase the likelihood that they get paid back, right? And then a liquidation is when quite you beyond a certain threshold, or you cross the point where your creditor doesn't believe you'll be able to pay back what they've lent you. And at that point, the collateral that you provided for the loan in the first place, they just basically fire sell it or sell it with some urgency to get something from the loan on the assumption that they're going to get a fraction or not the entirety of what they lent you out in the first place. Any of that wrong, or do you think we're mostly there?
No, but yeah, that's
Okay,
right.
so with that in mind, when people talk about contagion, I mean, do you want to handle this bit? I feel like I'm monologuing.
No, hit it, hit it.
Okay, so as far as contagion goes, what does that term kind of imply? Well, when you're a big reputable hedge fund in the crypto space, the assumption is you get credit quite easily and you get a lot of trust, and maybe they're not monitoring your positions as closely or whatever else. And so contagion is when, especially with the macro stuff going on, but it's basically when you get a spillover from a large fund blowing up, and that fund had credit from a bunch of different institutions who assumed they were good for it, and so they then have to, all at the same time, presumably as the news comes out, urgently sell the collateral that they were offered in return for their credit, and that just has kind of a spiraling effect of a big blow up causing a lot of lenders to have to basically fire sale collateral at the same time to recoup on loans that they're probably not getting back, or not getting back for a while pending leading proceedings or whatever else. So it's basically a term used to describe the knock-on effect that takes place, or the spiral that takes place, a bit like a liquidation cascade, to be honest with you, when a large party is unable to meet a bunch of credit agreements at the same time. And so all those firms who lent them credit have to sell down their collateral or whatever they can get their hands on at the same time. And you and I both know, and as we've written before in Technical Roundup, that was quite a timely comment to make as well, that sloppy selling always has a larger price impact, because bigger size into thinner books equals bigger moves. What do you think so far?
Yeah, and I mean the thing is, what you have to realize is that while that is happening, everyone is hurting, right? Because you're kind of taking away each other's liquidity, and you're all like just kind of getting completely wrecked because you have to get rid of it. But you also don't really want to crash the market, and then you have to kind of figure out, okay, do we want to keep it? Is this going to be bid up, or is it gonna like go further down? And then some people might actually like just be like, okay, we can't really sell this, so they're just going to take massive losses. hoping that it's going to turn around. There's all kinds of bullshit that happens. I mean, it's crypto, right? And whenever it moves this big and big people get blown up, it's usually the case that a bunch of people lose money at the same time, and that kind of compounds on each other, right? Because
Yes.
the more people sell, lower prices go. The more people lose, the more people have to sell, and it
Yeah,
just
it's
keeps
like a
on going.
liquidation cascade, right? This is
Yes.
just this is just like a liquidation cascade, just a structural one, and with much more money at play. That's probably one of the better analogies, or ways of thinking about it. And I
Hmm.
think the specific 3AC contagion has a few heads to it, if you will. One is them having to just fire sale whatever assets they have or their own stuff in order to meet whatever obligations they can, right? And I think they're going to get sued to high heaven if the things that we're reading are correct. So there's that, right? Trying to recoup what you can. The second one is parties that lent, or specifically lending firms or trading desks or whatever else, parties that lent credit to 3AC, assuming them to be credit worthy, have been selling and may have to. Again, the full extent of this isn't clear because obviously the financials are completely opaque, right? Like Celsius, we just
Yes.
don't know. We can kind of infer, speculate, take their word for it, whatever else. But there are affected parties who have had to and may have to continue selling collateral or just yeah, I mean, selling collateral with some urgency as a result of the 3AC insolvency. I think Genesis has said they basically liquidated them. 3AC said, no, not 3AC, obviously. Genesis said they liquidated them. BlockFi said they liquidated them. By them, I mean 3AC. Bitfinex said they weren't liquidated, but they closed their position at a massive loss. FTX said they were liquidated. I mean, this is just like a colossal blow up, right? And those
Yes.
liquidations, again, to be clear, when we say they liquidated them, it means they sold their collateral to close their long positions, right? And that's obviously selling pressure. And the third head of this kind of implosion or contagion risk is that there are currently rumors circulating that 3AC was doing a lot of treasury management for a bunch of other altcoins and projects they invested into. I mean, that to me is very dodgy from just basic conflicts point of view. But whatever else, they appeared to offer a treasury management service for their venture arm or the projects they were investing in, and that clearly didn't go well or can't have gone well. Um, and that means a lot of these protocols that thought they had safe treasury with 3AC may end up without any treasury whatsoever, and then they may have to sell other stuff that they didn't give the 3AC or whatever else. I mean, it's hideous, it's messy. There are probably 10 more things we don't know or can't talk about, right?
Yeah.
It's this is the extent of it. It's just basically an IRL market structure liquidation cascade where a big blow up of a previously extremely reputable, credit-worthy institution has knock-on and ripple effects both the projects, treasuries, lending services, trading desks, exchanges, the whole lot.
Yeah, and the reason why this takes so long, right, is because, I mean, some people they have to sell or liquidate immediately, like I said. But obviously, if you lend free AC and you kind of lose a shitload of money, and you need to pay back someone else, they're not gonna come knocking the first day, right? They're gonna be coming 2 or 3 or 4 days later. Obviously, in kind of news events like this, everyone wants to know what's going on, but like you don't even really know who's involved at all. Like there's so many people, which kind of just means that everyone has to figure out, okay, who owes who what, and people have to figure out what are they going to get back, what are they not. If they don't get enough back, do they have to, like you said, sell something else? And all that kind of stuff takes time, right? Because people always kind of think that this has to play out quickly. The initial and the biggest liquidations obviously do, but all of the ripple effects can take a long, long time. Especially in this case, I like what I find really interesting is that they have a bunch of equity in a lot of crypto companies as well, which I don't think they sold off yet. I'm not entirely sure.
It's probably not easily liquid either, right? Which makes it
Exactly.
trickier.
So they have like they basically, from what I understand anyway, um, most of the liquid stuff is gone. Or should be anyway. And this is all just hearsay, me speculating. So I don't know. But from what I understand, that's the way it is. And the illiquid stuff they're trying to get a price on now, which is obviously not easy and fucking sucks. Imagine that, like you
Yes.
have like equity in a bunch of these crypto firms during a bull market, and it's up a shitload, right? They I mean, they must have printed so hard, and now at like the depths of the bear market, I mean, Bitcoin's alone is down like 70%.
Yes.
Altcoins are down 90% across the board. So it's like it sucks when you have like a good portfolio of stuff that normal people can't actually invest in.
Yes. Also, their
And
buyers can absolutely shaft them now, right? Because they know they're
yeah,
distressed and they're wrecked and they need liquidity. So they're going to need to set like such an attractive, like the buyers can basically set almost any price they want as long as they
yes.
give them liquidity, right? Because they
So
know they're
the
distressed and they're blown up.
So everyone that kind of has money still, and the funny thing is, like a lot of people are just so wrecked. Like the entire, it's interesting because this drop, like it for me, it didn't feel like. Obviously, it's a really nasty drop, right? But for me, it didn't feel as bad because I mean, I've just been chilling out of the market for most of it, right?
Same.
But but it's like when you then see all these like bigger names just get completely rinsed, right? And those are the people that are usually like taking advantage of this kind of stuff, right? It's like free AC would usually start leveraging heavily at these kind of lows or prices. Now they're the ones that are blowing up, right? So it's a really interesting dynamic where the big guys actually took a shitload of losses, and a lot of the smaller ones were nimble enough because I mean, let's be real. Like once 60K broke, and once like all of this macro stuff came in, a lot of us actually were just like, okay, let's just chill. Let's just not do too much. See where it goes. And the bigger guys actually either can't get out of their positions quick enough, or they just were so convinced of their thesis that they just didn't want to see it. And yeah, it's an interesting kind of um, market right now where the big guys are the ones that are hurting, and the smaller ones, obviously, like a lot of retail is hurting as well. But I
Yeah.
feel like in our circles, most people got out of it okay. In comparison to what we've gone through 2017, 2018,
Oh,
where
yeah.
legitimately when you went into Discord, people were talking like legitimately making, okay, if I get liquidated again, I'm gonna like yeah, end it. And it's like that was the kind of humor back then. It's very, very different now, right? Most people are still chill on our side of things, like from the trading perspective. But obviously the big guys not doing too well.
Not doing too well. And as per this article from the block, um, where is this? Yeah, after a difficult week, to say the least, crypto hedge fund Three Arrows has hired legal and financial advisors to help work out the best way to manage losses from a broader market sell off in digital assets. Kyle said, "We're committed to working things out and finding an equitable solution for all our constituents. We have always been believers in crypto and we still are. Well, your positioning certainly reflects that." Um, and then yeah, the Wall Street Journal also reported comments from Davies indicating that the hedge fund is exploring both asset sales and a rescue by another company. It is also trying to reach agreements with creditors which could buy it time. It has brought on Nicole Yo, a partner at the law firm Solitaire LLP, to advise. Is Alameda just going to corner the market at this point?
I mean,
That seems to be the elephant in the room, right? Like they're just gonna, you will own nothing and you'll be happy, type of thing. With all these funds blowing up, and you know they're probably coming out of this laughing, and with a relatively huge portion of market share, or at least an increase on a kind of year-on-year or
yes.
cycle-to-cycle basis. That's kind of how it feels.
I mean, the scary part is that I think like Binance and Alameda just have so much now.
It's just the entire market, isn't it?
Yeah, and it's obviously, I mean, from like just the perspective of okay, I want to have this decentralized somewhat. I mean, it's just
No
completely
way.
it's not anymore. And even if you have like a decentralized coin, if the holders aren't decentralized at all,
Yeah, yeah.
but you have like the person holding or like a company or whatever holding like most of it, or two companies holding like the majority of it, is obviously, I think, a bad news. But you can't really fault them for it either,
Right. All they
right?
did was survive, right? Like you can't
Yeah,
punish market participants for not blowing up and having good risk management because you see what happens when they don't. The entire market gets just hammered, right?
yeah,
And I think on the note on this contagion thing, and this is a dynamic which we discussed a couple of weeks ago, that not only do we still have the same macro headwind horse shit that's just been contracting liquidity across the financial sector and nuking risk assets, but then as risk assets nuke and as this QT cycle really kicks off, crypto specific idiosyncratic weaknesses come out as well and add on top of that natural supply, right? So the
yes,
supply from tightening is massive, Like, I think that's still, or at least maybe up to recently, the biggest kind of headwind in the market is broader conditions, the macro trade, whatever else. And it's just that it has a knock-on effect on crypto where you get crypto-specific or crypto-native weakness on top of that. And it started with Luna, then it's Celsius, and now it's 3AC blowing up, and now these lending services and desks are distressed, and it's a mess. And I don't think we need to cover the Celsius news at much length either, because we did in the newsletter, and also I think it's been beaten to death, and we've moved on basically from
Hmm.
Celsius. But that's another thing, right? It's like a lot of these businesses are not built sustainably, and the rates they offer are not sustainable, and the way they generate yields only works in a bull market because it's the typical DeFi thing you and I have talked about where the cope was, oh well, crypto native wealth is never going to move out or move around because you can just like park your money in stable coins and yield farm and then kind of buy the dip or whatever else. Horse shit, right? Completely untrue.
Yes.
When speculators die, everything dies, and this yield farming is no exception. So
I mean, people don't really realize where the yield is coming from, right?
yes,
Because
yes,
the reason you have the high yield is because people are actually like they want to invest with your money basically. Like they want to gamble with your money. So
they
like
want
that's
more stuff than they have, right? Like
yeah.
in a nutshell, that's where the yield come from. People want more stuff than they can. Yeah, they want to be long more than what they can long right now, and therefore they are happy to pay a premium to access that capital. So when
Yeah.
speculators die and get blown up and get carried out, that surprisingly that demand goes away as well, and that's reflected in the yields or interest rates or whatever else.
Exactly. So it's kind of like it's always going to be always going to have yields that are high in a bull market, and we're always going to have yields that are basically non-existent.
Yes.
Or you're gonna sometimes you have high yields in bear markets, and those are the things that are just blow up, right? That's
Right.
where you lose all your money. It's the same thing with 2018 for the people that have been around for a while. With masternodes, where people were like, okay, let me just get a masternode, which was basically just you get some money for locking coins, basically.
Mm-hmm.
Um,
The good old days.
and the coins went down 99%, and you made like whatever 20 to 30% extra in the coin that you actually locked up. So it's like you're down 99%, you have like 30% more than you used to of the coin at the start. And it's the
Yes.
same thing, right? You get yields, you get high yields in a bear market. You should be like, what the fuck, where's this coming from? Why is it so high? And is this actually safe? And most of the time, if it's like really high yield in a bear market, it's just not safe, and you should be running for the hills. In bull markets, a little bit different, obviously, because yeah, people just want to buy more, and
Yes.
the reason why this market blew up so heavily is because a bunch of people bought more than they could or should have. So
Yeah.
yeah,
And you can see this effect in terms of yields across a bunch of crypto instruments. You can see in perpetual swaps funding rates. You can see it in quarterly futures basis. Um, you can see it in the kind of risk-free rates or some of the DeFi vaults, or what you can get on Yearn, Compound, a lot of C DeFi exchanges and whatever else. And it just basically follows the market. It's just as reflexive, right? When it's super bullish, everyone wants to be long. There's a reward for giving people that like extra liquidity when they want to be long, and then when everyone blows up, no one wants to own this stuff or be long. So no prizes for handing out collateral that that people don't want to hold, right?
yeah.
Do you want to talk about charts? Because I think we're done pretending we actually know anything apart from candlestick make boink. We did a decent effort, but I think the jig is up. Um,
I mean, the candlesticks aren't making boing though. That's the problem.
why don't you take us through your thesis here? Because you're long, right? Or you bought some exposure, added some
Yeah.
deltas, did whatever. You bought some coins.
Yes, I bought some
BTC
coins.
around 21, 22K, something like that.
Yeah, so I bought BTC at 21.8 or something,
21.8.
22 essentially, 22 essentially.
And ETH
Uh,
around what, 1.1?
yeah, a little bit higher, actually, 1.2.
Okay.
And what I did basically was I didn't, and I mean, as stupid as that sounds with the current price action, but I didn't want to miss out necessarily. I wanted to have like a position that I wanted to add on later. So what I
Right.
basically have been doing the last 2 days has just been like trading around my position a little bit.
Hmm.
So like the first time we hit near 20K, like right near it, I bought a bunch more, got rid of that when we took out the BitMEX wick. That's like a whole like trade setup that I do like from time to time. Um, and that's what I've been doing like a little bit, but not really too much. So like I'm underwater right now. Obviously, price action sucks. This
Right.
kind of like this is actually what you don't want to be seeing, the current price action, because what's basically happening is every bounce gets sold heavily into. Kind of scary fact is that a bunch of that selling is from Bitfinex, which usually knows what's up. So
Right.
it's not necessarily comfy position, but yeah. So what I did was I basically bought into the 200 moving average on the weekly time frame, which we've been talking about for a while.
Why is that acting as
Um,
resistance now? That's so disrespectful.
yeah, it is.
It's so disrespectful. It's just rude. Like, where are your manners? Who raised
Yeah,
you?
I mean, I'm guessing it's acting as resistance because a bunch of people bought it and are now freaking the fuck out. So they're
Right.
like happy to take the profit that they've, or like not profit, but take the position out
Take the
at
exit.
roughly, yeah, exactly, at roughly break even. So,
Right.
but yeah, for me, this is just a trade of, okay, we're hitting the previous cycle high, which is 20K. We are hitting the 20 moving average.
200 week.
And yes, I, you know what I'm
You're
talking
missing a
about. Yeah.
zero, both in
Yeah,
the moving
200.
average and your portfolio, but it's fine.
Yeah, I mean, it's not that bad yet.
It's like
um,
I'm long Giga coins. I don't even know which moving average it is. I just know there's a moving average here somewhere, and I bought it. I'm underwater.
I actually have it on my chart too, which is maximum pulp.
Oh, that's great. That's when
Um,
you know it's bad. Like Don is buying moving averages and bored apes. Like what am I even looking
oh
at? What is
yeah,
going on?
yeah. I mean, that's the whole different story. But let me quickly talk you through the
Please
Bitcoin
do.
thing, and then we can
Meme you.
jump to the next one. Yeah. So
What
yeah,
time frame do
that's
you want me to have on, by the way? I've got the weekly, is that right?
yeah. The weekly
Okay.
is pretty much all there is to it. I
Yeah.
think there's a chance, like with current price action, that we're dipping into like 18K ish.
Mm-hmm.
That's like the nearest support. But I feel like sentiment is really, really bad, obviously, for good reason. Fear is as high. I have not seen this amount of fun since 2014, really. I cannot remember like 2018. Yeah, people were really bearish. Like I said, people made fun about suicide, all that kind of shit, right? So the mood was really, really bad. But the news went as bad as what we're having
Oh, for
right now.
sure.
Like
Yeah.
nothing's been this brutal on the news side ever since basically 2014. Um, and so far, it's actually still just trading along the fucking S&P, which
Ugh.
is completely ridiculous.
Should I open it? Should I
Especially,
bring that chart up? S and
yeah, I
P
mean, you
weekly or
could
something?
S&P monthly is actually quite nice.
Okay.
So like we're basically
Ugh.
just still copy trading that, and the S&P monthly is at monthly support. So I was just like, okay, we have the S&P at support, which doesn't have to mean much, but it's something. We have Bitcoin at historic support levels, um, with moving average and cycle high, and sentiment's really bad. So I'm just willing to stick my neck out for once, see how it goes, and if it goes poorly, I'm just going to exit and buy back lower.
Yeah.
Now, like I said, the current price action is kind of dog shit. Not gonna lie. Like I'm not gonna pretend like this is nice price action while it's not. This is just basically every single bounce gets sold into. Not really much different from what we've had the entire way down from 17K,
Right.
70K. So yeah, that's kind of rough. What I've been more focused on, and I gotta say, like Bitcoin isn't necessarily my biggest position. Funnily enough, Solana is my biggest position, which is an altcoin.
Yeah, you
Um,
love Solana. All you've done on this show is talk positively about it, so it doesn't surprise me at all.
Yeah, I mean, I've just been like, we've talked about Solana on the show before. I've been shit talking the fundamentals, whatever, a bunch of times. So this is not me like just hyping up my coin, whatever. But yeah, it hit weekly support, and I saw a bunch of buying that I wanted to see. Bought along with it. Bought actually like got a really good entry when when Bitcoin hit 20K, and yeah, I'm just holding that. I hope it doesn't just go to zero. But my thesis, and this is kind of like a weird one, but my thesis is that if everything blows up and Alameda just kind of remains, right? What are they gonna bid once we bottom? And I think it's gonna be Solana. So like even if this goes down, I think there's gonna be like a big V coming for Solana. just based on the fact that they're gonna be buying some altcoins. I'm guessing if this blows up further at some point,
Yeah, it's like
or
what
if it's
if you
already bottomed.
if Trabuco presses the green button on his desk, right? What coins get bid, basically? And your
Yes,
argument is that
exactly.
Sol is in that basket, like liquid
Yeah,
basket of stuff.
and they're winning right now, right? So I don't really mind being on their side, especially when the technicals don't look too bad, right? So if you look at the Solana USD weekly chart, that hit support. I've actually had this kind of like path from 47 all the way down to 25 drawn in for a while now, and then it bounce all the way back to 45, and I think that makes a lot of sense technically. Just basically bounce from range low to range high, and you can still decide whether you want to go down or up. Um, that's on the Solana USD pair, and then you look at Solana BTC, and that hit the range high as well, bouncing heavily from it. So yeah, that's been okay. That's kind of what's been keeping me sane because, like I said, my Bitcoin position is underwater, my ETH position is underwater. So my Solana positions are actually more than 10% up, which kind of makes the other two positions like I could still close right now and still be break even, which is nice. A little bit above break
But
even
something you
actually.
can't break even is moral integrity after buying a Bored Ape. How do you feel about that?
Yeah, the Bored Ape is just me. Like I bought a bunch of ETH, right? And I was like, okay, what do I want to do with it? It's just kind of like I was just feeling like I wanted to just have some fun. So I looked at NFTs, wanted
Yeah.
to buy some punks because I've been like I was like if the market nukes enough, I'm just gonna buy some punks, just keep them around, I guess. And then I talked with Loomdart, and he was like, yeah, he likes punks, but not as much as apes, and he thinks apes is a better bet. So I was just like, fuck it, I'm just gonna buy one. Bought a bunch of other NFTs because I sent too much to the wallet to buy the punks. So I was like, fuck it, have a couple ETH more. I think I had like a 30 or 40 ETH more than I needed. So I just put that into like some other random NFTs that I liked and called it a day. It's not necessarily like me putting on like the big speculation play, whatever. And I don't really have too much of a thesis behind buying the ape. It's just I just thought it'd be funny, and I thought like in general, holding like one blue chip, if you will,
Yeah.
is on the NFT side of things isn't necessarily the worst idea. So it's just what I did. Like, there's not that much behind it, and then obviously I memed it a
Sure.
little bit on Twitter, which turned out to like made my fucking day. It was so funny.
It was fun, yeah, seeing all these apes replying. Well, it's the same ape, but different people. Also,
Yeah,
to be clear,
exactly.
like positioning wise, right? First of all, I saw a lot of this is me white knighting you because I've got nothing better to do. But a lot of people were expressing surprise that you bought, and then you could just find the tweet from 1, 2, 3, 5 weeks ago saying, "Hey, if it does this, I'll buy." It basically does that, and you buy, and everyone's like, "Why are you buying?" It's like, I don't know, man. Maybe because I made a plan and it kind of more or less hit
Yes.
what I was supposed to do. And the plan is never if price reaches support. Oh, and everything looks perfect, I will buy it, right? A lot of the time, you decide the level where you do business, and whatever fundamental drivers take it down there, you kind of have to take them in your stride, right? You
Mhm.
can't plan in advance for what the sentiment and fundamentals and whatever else is going to look like when price reaches an area where you know you should be doing business in general. That's the whole point of making a plan, right? That there are going to be variables in the future that you don't have control over or that make you feel a certain way or whatever else, and you should be able to almost not look past them, but at least trade despite not having every single piece of information available. Um,
Yeah.
that's
The thing is,
important. Go on.
yeah, the thing is that you have to realize, right? When you're buying, like I have been buying, right? It's never gonna look good. The bottom never looks good. So you can either wait till it does look good, which I think is not the worst idea right now. Like if my family asked me what should I be doing, I'd probably not tell them to buy. I'd just be like, okay, just chill, wait till it all clears up, and then just do whatever you want to. Um, so like that's the safe play, right? You just wait it out. You wait it out. You're gonna buy like 50% higher than I do probably at some point. It's just I'm gonna get stopped out two or three times while I trade my way down there, right? I mean, I bought 30K or almost 29K, um, sold 29.1K, um, and I'm doing the same at 20K. And if it crashes back down again, I mean, I hope this time that I get out. I'm not entirely sure if it crashes that I will be able to this time around, but like that's usually how I play it. So I buy, price doesn't do what I wanted to, I sell, I buy again, it doesn't do what I wanted to, I sell. And then like at some point you hit such low support levels that it just bounces bigly. And then I'm up like immediately 50%, 60% on my position,
And it
right?
way covers those other two stop outs, right? That's the second point
Yeah.
I was going to make. You're actively kind of balancing and trading around these positions. It's not like you blindly just buy one clip and you sit there and do nothing and buy more if it goes lower, right? This is a very dynamic process. It's informed by price action. And it's one of those you're happy to take a couple of haircuts and de-risk at the top of the local range, whatever else. If it means you can keep rolling the dice for like a very big bounce, the type that you get at bottoms or even for counter trend setups. I think that's where the common misconception comes from, maybe because of how some people talk on Twitter, is that when they say they're buying, that just means they just like blew their whole load and they're going to hold those coins until it either goes to a million or it goes to zero. But a lot of the time, especially when your size gets big enough, you kind of have to trade around the position or do it in clips and spread it out a little bit and scale and whatever else, right? It's a bit more
Yes.
management work, especially if you're trying to be nimble with it.
Yeah.
I that makes sense to me. I like the idea. In terms of targets, if we do get the type of at this point it's very sad, but we do have to call it a visible bounce, right? Because I'm looking at the
Yes.
weekly ETH/USD chart, for example. There's just been nothing visible apart from I can't even count that many red candles, right?
Yeah,
If we
it's
get a
10.
type of count, it's 10. Jesus
Uh,
Christ.
10 closed ones,
10
11.
closed ones, yeah. Oh my god. Anyway, if it
Mhm.
does generate, because hopefully, if the trade works, you're looking for a visible higher time frame bounce, right? That'd be kind
Yes.
of a minimum requirement. Where do you see that taking the market in terms of targets for maybe BTC? We'll do BTC, ETH, Sol. How about that? So I've got BTC
Okay.
weekly up.
Yeah, BTC weekly. I mean, honestly, if it bounces and it bounces strongly, I think like betting on 28K happening is not crazy.
Hmm.
If not just like the low of the range, which is 30 something, 32K, I think.
Yeah,
That is like a decent sized bounce that doesn't really change the picture at all.
yeah,
It just be like, and you could compare at that point like the Bitcoin chart to the S&P chart, which did like roughly the same thing just
right.
like a couple of weeks ago, like not a couple of weeks ago, like just 1 or 2 weeks ago, where it just bounced from support into resistance straight up and then nuked again. And that's not the biggest bounce in the world, right? It's obviously bigger than you see or you expect, because people are like just completely so bearish now that they cannot imagine Bitcoin going up 50%, right? But the thing is, Bitcoin is down so much now that like we are down 70%, right? So if it bounces 50%, or like to the next resistance, basically like 50, 60%, we're still gonna be down 50 or more than 50, right? So it's like I don't really think that's too unrealistic. It just might take some time. So that's kind of like my first target. If I see, and this is like kind of my trade idea, right? So like I'm buying this shit. I hope that it's the bottom, because I mean, at the end of the day, right? If I told you at 60K that I'm gonna be buying at 20, you would have called me crazy, but not crazy for buying there, but for crazy to expect that it's actually going
Of
to
course.
20K,
Yeah.
right? And now we're at 20K, and people are like, "You're crazy for buying here. It's going to 14, and then it's going to 6, and then it's going to 3." Right? So like the targets keep on lowering, and I mean I don't really mind buying support in those kind of circumstances, aiming for the next resistance. So for Bitcoin, I think like 28K is the conservative bet if it bounces. If not, like if you want to take it higher, I think the resistance makes sense. That is 32K, right? That's what I'm looking for Bitcoin. Obviously, it doesn't have to happen. The market looks like shit right now. Um, and it's always, I mean, when I say these kind of like, I still remember talking about 14K when we were trading at 60, right? When I was like, okay, yeah, if this range breaks to the downside, you kind of
It's
have to
monthly
expect,
support, right?
yeah, you kind of have to expect monthly support. And then people were like, you're fucking nuts, right? And now when I'm talking about like 30K, I think people are going to say the same thing. I think back then 14K was very unlikely. I think right now 32K is not necessarily too likely. But stuff changes quickly in crypto, right? So that's kind of my target. And the reason why I'm comfortable taking these kind of trades is because the risk reward is just so big, right? There's no real resistance on the way up, and support's close by. which just basically means if I think this play has like a 20% chance of working out, I'm going to make money in the long run whenever I take these kind of trades. And I think a bigger bounce on the Bitcoin side of things has like more chances of happening than just 20%.
And
So
where does
that's
that land
that's
ETH for you?
yeah, and ETH is really interesting, right? Because I think ETH can do the same thing, same kind of percentage move into 1.8K. I think that's like a relative realistic target and would still look really, really bearish. Um, if we get an altcoin pickup during the up move, I think there's even a world in which it goes to 2.5. Um, Now, like I said, all kind of sounds crazy. Market is super bearish. You don't have to shoot for the moon, right? I don't want to set your mind on, okay, this has to go to 2.5K. You need to stay nimble, right? Because, like I said, this shit could go down and quite hard. I'm just like, when I take these trades, I have like decent sized targets. Otherwise, I wouldn't be taking them. And I'm just hoping for basically the reason why I think we can even go this high is because all the market makers and all like the entire liquidity disappeared basically, right? So if you get a bunch of people really really bearish and they just kind of hedge themselves, the bigger people hedge, the smaller people just net short 50x leverage whatever. Uh, you can get big candles to the up and downside when liquidity is gone. So the risk obviously is, and this is like something I'm acutely aware of, is that if we lose 20K and there's no liquidity, there's a chance that this just can completely wicks through like 19, 18, 17. But the same thing is true to the upside, I think. There's not going to be too much liquidity on both sides. So I think there's a chance that we just run through levels. And yeah, 1.8K is my ETH level. If altcoins go completely nuts, and some of them have already started doing so, which is really interesting. I don't know where to place it. It's good for me because I mean I bought Solana, right, and I'm banking on it because I bought Solana when Bitcoin was trading higher than it is now, and I'm still in quite a bit of profit. But yeah, if altcoins pick up, I think that there could be higher targets. So I'm gonna keep on evaluating on that. And then with regards to Solana, right? I think the conservative target is 45, 50, just a range high. Um, but if we get a Bitcoin squeeze, right, I think we could hit that without even Bitcoin actually going up too much. I think if Bitcoin stays in the 20 to 20K range, I think Solana can still go to 45. It doesn't really need Bitcoin for that
Yeah,
because
the prices are so depressed, right? That even a counter trend bounce gives you like 50, 100% type of thing. It's just
exactly.
timing that has been impossible because there haven't been any counter trend bounces.
Yeah, so my bet is basically just mean reversion because I mean Solana, for example, is down 90%, right? If it 2x's, it's still going to be down 80%. That's still down bad. If you bought the absolute pico top um, with $100, right? Whether you have 10 or 20 at the end of the day, it doesn't really matter to you too much, right? So I'm betting on basically the guy that has $10 in Solana now because he bought the top at 100, that guy is going to have 20 soon. Now, I'm not entirely sure if that's going to happen, but the market is so low that it's just relatively cheap to pump this kind of shit, right? And that's a good thing with altcoins, right? When they go up high and then they go low, so low, in fact, that you don't really need too much money to push them around anymore. So during the bull markets, it's really, really hard to influence the market um, like an awkward market even because they're so liquid and they have such big market caps. But during the bear markets when they're down 90%, right, and people start shorting, it's really easy to take advantage of that and just kind of squeeze them out because I mean the market cap is kind of small and you can just kind of take advantage of it. So I bought a bunch of Solana just to make sure that if we get the upside, uh, I'm going to be well positioned. And I mean I talked about why earlier. But yeah, Solana for me, the conservative target 45. And I think if all goes well, right, and if everything goes completely crazy, like I said, with ETH to 2.5K, I think Solana could go to $80 quite comfortably. Would still be a bear market, would still be a lower high, would still be bearish in general. So I'm not banking, and this is something that I want to be very clear about as well. Even if we bounce from 20K, I'm not entirely like I don't think the bear market is over at that point. This is all just a counter. This is just basically a mean reversion play from me. And those are inherently risky, right? If you think the bottom's in, you can just buy and keep your spot. And something I've done at 4K previously for Bitcoin, where it was just like, okay, if it goes lower, I think it's the bottom. If it goes lower, I mean, it's just going to be a better buy. But I don't really give a shit. It's so low that it's just a good buy. Now, 20K isn't quite there yet for me, where I'm like, okay, I can hold this for the next 10 years and be happy with it. I think if you buy 20K and you hold it for a couple of years, you're going to be in profit eventually again, no matter what happens. But it's not necessarily like an entry where I'm, okay, fuck yeah. I think like 14K would be an entry where I'd be like, fuck yeah, this is like a generational buy. People are completely mad to give it to me. But 20K is close enough, especially after a move like this. Obviously, not an easy trade to take. I feel kind of comfortable in general, but there's a lot of things that can go wrong in it this time around. We talked about free AC, we talked about macro. There's a lot of stuff that is not really easy to figure out this time around, right? Back at other lows, I was more certain because we didn't have so many confusing shit happening all at once. But you're never gonna be completely clear that something is the bottom or not. And when it gets low enough, sometimes it's just worth it to take the punt. At least for me, that's my trading system. I like to be the guy that kind of buys the confirmation, but I also do like from time to time to just buy when I think it's low enough and sentiment is bad enough, and resistance is far enough to just take a trade like that.
Yeah, makes sense. None of your trades should be terribly confusing, especially for our audience, especially given you look, if you were buying 60, 50, 40, then you'd be like, look, dude, there's clearly no system going on. This is just some bullshit. You're rounding down by 10 every time and just buying. That's fine. But also the context matters, which is that you did a lot of de-risking pretty much on the range breakdown in the high 50s, 60K, thereabouts. Yeah. So it's quite a different trade if you de-risked 58K or whatever it is, having a go at 30 and then having a go at 20. That's a different trade from someone who was like all in altcoins from the top and keeps trying to like double down in DCA on every dip, right? The context really matters. Even when you're fishing, you're already getting your coins for half price, essentially, or like a third of the price now. And that really, really, really matters and affects your nimbleness in the most positive way. And just looking at the BTC chart is like, what are the two most important higher time frame support structures that we've had so far? Even if for a counter trend bounce, it's the 30K range low and it's the 20K previous cycle high and 200-week moving average. You've poked at the market so far at both of those levels. That shouldn't be terribly like confusing, right? And obviously, if that one fails and fails spectacularly, then the trade is even more straightforward. It's just like an existential panic long sub. 15K, 14, 13, 12, 10, whatever. It's just like existential panics. The industry must bounce here or it's dead forever. Crypto has failed type of buy. And that one takes the least thinking of all the setups, right?
Yeah.
So I think it's rather straightforward. And I think especially, technical roundup readers or whatever else should find the logic of it accessible. I think it's just because so many awful trade ideas end up on Twitter and traders who've been taking the same trade and in the same trade at every single like increment. It's just clear that they don't have and this trading system isn't as sensitive to specific levels. That's me being super charitable, but I'll put it that way, that some trading systems are much more kind of price level agnostic and look at other things. Whereas for you, it's like just eyeballing the chart from 60K. It's like, what are the key points? Well, 30, 14, 0, right? It's like 30, 20, 0, basically. And 0 is anywhere between monthly support, basically. But that's what I mean. You're only going to get, realistically, looking at this high time frame chart, how many of these types of structures exist until the industry fails? It's like 2. It's like 2 levels left until the industry fails, basically, right? So it makes sense to poke and prod at them. Hopefully, I've done enough white knighting there. I'm still on holiday. I'm in Florida, big chilling. And then I'm going to go to NFT NYC and see if these people know that we're in a bear market and inflation is high and people can't afford to fill up their cars.
Afterwards. You're gonna be so
I mean, dude, if I shorted my consensus tweet, did you see the tweet I put out? I was like, first of all, it's so nice to meet all my friends, etc. Second of all, just a bunch of tourists, nuke it, and the market just 3AC blew up on that tweet, basically.
Yep.
So maybe I should have taken that. But yeah, NFT NYC, if I'm not under the actually, I'm not even going to go there. If I'm clear headed at NFT NYC, I'll try to come back with some reasonable market analysis or anything else, state of the industry. But as you and I know, a lot of the NFT guys are like, first of all, it's their first cycle, so they didn't know what the fuck's going on, right? And second of all, they tend to be kind of more USD agnostic, I guess, because they value their collection and define their net worth by like the floor price of their PFP. It's like, Ether's down a quarter, stop it, it's no longer the same shit, right? But for them, it doesn't matter because like the prestige is in large part determined by the floor price of the project and its relevant, its relative resilience or whatever. That's a wonderful music, thank you. That lines up with my speech very well. But
Sorry
yeah,
about that.
that's fine. NFT NYC coming up. I don't know if those people know what's going on outside, like in the metaverse, let alone the metaverse. So I'll see what the vibe is like there. This also felt like a bit of a like an interview more than a podcast session, to be completely honest with you. But I'm glad we got to pick your brain, given you're the one who's actually actively trading and doing this stuff. One
Yeah,
thing
it
I
was
want to
fun.
bring up, in case anyone happens to care about what I think, is that on the weekly time frame, historically, again, the 200-week moving average has been really good. So if it fails, I think that's going to bring in a bunch more bearish positioning because it will be the first time that a larger bear trend hasn't been stopped by the 200-week moving average. That's going to be seen as a further breakdown signal. And then I think, as you know, for me at least, the best bullish setups are failed bearish setups. So I think if you get a weekly close below the 200-week moving average, and then in the next 1 or 2 weeks or whatever else, it ends up reclaiming it, that'll be a super sick, for me at least, a convincing kind of risk-on signal that all the positions that puked the quote-unquote break of the 200-week moving average are then wrong when it's reclaimed. You can define your risk at the low, and then you've got all the fuel and juice in the world for a larger 20, 30, 40, 50% counter trend move, which again would still be bearish and the trend hasn't changed or whatever else. But I just really think that that's one way to get a lot of offside positioning into the market, which will then swiftly unwind once they're wrong. I think same for ETH, the 200 week is around 1.1k. That lines up with monthly support. If the week closes below and you see extra selling or positioning on top of that, and then you get a reclaim afterwards, all that fresh positioning which was betting on the break of the 200 and a larger time frame downtrend, they're going to be wrong or at least very likely squeezed. And I think that's when you at least get a risk defined setup for a counter trend long. So people wondering what I'm thinking, I mean, I'm a piece of shit on holiday, but and I don't have access to my full capital anyway, so that's a bit of a dud. But as far as weekly time frame signals go, if the week closes below the 200-week moving average, I think you just got to chill and take it for what it is. Like this is a breakdown. This would be a breakdown as well. And I think the next best signal would either be kind of just much cheaper at support, the levels Don was talking about, or a failed breakdown of the 200-week moving average, which would be a nice reclaim. So that's kind of what's on my radar for the next couple of weeks.
Yeah, well said. I mean, it's gonna be wild regardless.
Oh, for sure.
I still remember when I got back from Portugal and I was like, yeah, this monthly is gonna close like either back in the range and it's gonna be wild to the upside or down the range,
Yeah.
and it's gonna be just straight up down. Now it took a while, but we're there now, right? It's been straight down ever since. And I think we're gonna have volatility one way or the other.
Oh, we're
Like,
having it.
yeah, so we're gonna have some fun. I mean, I'm gonna have less fun if this breaks to the downside than other people,
We
but
get to have fun at support again, just 50, 40% lower or whatever.
yeah, exactly. And I'm gonna have 40% less money. But no, realistically speaking, I mean, what I want to make clear is you should probably not all in this. I'm
Oh,
not.
for sure.
And you kind of have to have your own system in place. Just because I buy doesn't mean you have to. It's worked for me in the past, but then again, like the smartest traders apparently have a chance to blow up as well. And I would count like the free AC guys as some of the smarter guys in the space anyway. So shit happens, but yeah, I'm still pretty confident in my trade and happy to take it, even though price action sucks right now. So yeah, wish you good luck, guys. Don't get liquidated,
For sure.
and yeah.
I think it's a good note to round up on. As Suzu said, manage your risk or the market will manage it for you. Prescient words, to say the least.
Oh
We'll
man.
see you on Monday markets and Tuesday newsletter, Wednesday stream, all that good stuff after the weekend. Weekly closes, you should have some idea of the kind of stuff we care about. That's all from us for the time being. Leave a smiley face if you think Don's gonna make profit. Sad face if you think he's gonna get stopped out or liquidated. And then if I start solo hosting the show, well, you know what happens. So fill in the blanks yourselves. Thank you to FTX, the mobile trading app, for supporting the show. Track your portfolio or hide it. Buy the dip, sell the rip, do whatever. Spot trading there. At least you can't get liquidated. Some firms in the space would have maybe preferred that. Enough chatting shit. I will be in NFT NYC kind of when this comes out, sort of, a few days later. So if you see a shaved head nerd with a British accent, don't come up to me. I'm socially awkward. There we go. Thank you. Enjoy the show. See you next week. Have a wonderful weekend and stay alive, to be honest. Like, if you come out of crypto with money and exposure the same year that Three Arrows Capital blew up and there's Celsius and macro and war and inflation and whatever else, like, you're probably going to be in a good spot. Let's be real, right? Like,
That's actually very true.
if you
Yeah.
can look back on crypto and say, oh, I remember this year when we had like every single C DeFi thing blew up and there was the whole credit cycle both in macro and in crypto and the whole thing imploded. Oh, and by the way, I survived while the biggest hedge funds blew up. That's probably going to be a good entry as part in the larger scheme of your investing career. So stick around for it if you can. That's all from us. Take care. Thank you for listening and goodbye.